Hi, I'm Madison, and this is the Home Finance Minute. And today we are going to talk about what it takes to get pre-approved. So, you've found a lender you want to work with, and you are considering buying a home. What is that first step in the pre-approval process? Well, after you've spoken with your lender, they are most likely going to request some documents from you. And there are three basic categories of documents that you will need to gather: income documents, bank statements, and photo IDs. These are the documents that the lender is going to ask so that they can go through your financial history, your work history, and prove and verify who you are in order to pre-approve you for a loan. So let's dig a little deeper. So let's talk about income. This is a key component to approving you for a loan. We need to know how you are making money and how you will be able to afford the mortgage payment that you have. So one of the most common forms of income would be from a regular job, whether you're hourly or salary, whether you get commission and bonuses, however that looks. Most times we will see income coming in from some form of employment. So with that being said, the first thing that your lender might ask for are 30 days of pay stubs. This lets us see what hours you're working. Are they regular hours? Do you work irregular hours? Are there different components to your pay structure, like a bonus or differentials? There's a bunch of things that can go into this. Overtime. These are some of the things we're going to look at. If you are an employee that receives commissions, or you receive bonuses, or maybe you work a lot of overtime, then the other thing we might ask for is your year-end pay stubs. So the last pay stub you would have gotten for the previous year, and we would see 2 years of those. That would show us that you regularly get commissions or bonuses or work overtime, and we would then take those amounts and we would figure them out to how they would spread out over a 12-month period. The next thing that we're going to want to see are your 2 years worth of W-2s or 1099s. If you are not a W-2 employee and you are a 1099 employee, then we will ask for those. And if you have more than one job, then we'd want to see both jobs. If you are contract out or freelance and you work for multiple companies, then all of that would be what we want to see. After that, a lot of times we're going to ask to see your 2 years worth of tax returns. This is going to show us more what you earn, especially if you're self-employed, especially if you are a 1099 worker, or if you own a business, if you're an LLC, if you're a corporation. That is going to give us a good indication of what you are earning and what you will qualify for. The next type of income that we might ask for is, do you receive any kind of Social Security award? If that's the case, then what we want to see is, A, we're going to ask for that letter, and B, we're going to look at your bank statements, which I'll get to in a minute, and we are going to want to go ahead and make sure that those deposits are going into your account. If you are applying for a loan and you've just applied for Social Security and you just got your first payment, that is okay. We can go ahead and look at that income as well. Another form of income that you might have are child support payments, or alimony, or some other type of court awarded income. If that's the case, then we're going to want to go ahead and see those court documents, because we're going to want to see that those payments are going to continue for at least the next 3 years, if not more. And we're going to want to also see that those payments are being regularly paid. So, for instance, if you've been awarded child support, but the person who is to pay you hasn't been paying you and isn't paying you regularly, then that might be something that we want to delve a little deeper into, and you would talk with your lender about that. Another way, this isn't the final, but another way that you might be earning income are through rental properties. If that's the case, we'll notice that on your tax return, we'll look at your Schedule E. We're also going to want to maybe see your rental agreements or your lease agreements. How long have you been renting the property? What you have in place? Is it a year-to-year agreement? Do they have a longer contract? Are they about to get out of the place? These types of things are information we might want to see. Maybe these are not the ways you earn income. Maybe you earn income through investments. Maybe you earn income through royalties. Again, a lot of that would be shown on your taxes. And once that is the case, and once we identify where you're getting your income from, then we would go ahead and ask for more information or more documents. Some of those I'm going to address in the next slide. Now let's talk about your bank statements. Most times we're going to ask you for 2 months of bank statements. And when we ask you for those 2 months, we're going to ask you for all the pages, whether the page has your list of transactions on it or the page is blank. We need all the pages. That's very important. So it could be your checking account. It could be your savings account. Maybe it's a retirement account, investment, a 401k account. The reason we're going to ask for these is we're going to want to see your deposits going in, meaning your pay stubs, your direct deposits, maybe it's your Social Security. We're going to want to see those being deposited into your account so we can account for those. And we also want to see the accounts where your down payment is coming from, where your closing cost money is coming from. We're going to want to see that it was not just put in there. And if it was just put in there, why was it just put in there? Maybe it was a gift. Maybe you just sold a home previously a few months before, and now you're using those proceeds to purchase a new home. Whatever that is, the underwriters and your loan officer, we're all going to look through it, and we're going to get some explanations. The reason we do this in the pre-approval process is to make sure that you have the funds that you need to close. And let's say you maybe don't have all the funds you need to close. That's when we might bring up, are you looking for some type of down payment assistance? Are you looking maybe to see if the seller will help you with closing costs? There's a bunch of other options that we have available, but we need to see where you are and what you have to bring to the table. And so that's why we're going to ask for your bank statements. Sometimes in other rare instances with different kinds of loans, we might ask for 12 months or 24 months, but those are pretty specific to certain types of loans, which I'll get into in another video. The next thing we're going to ask for are your photo IDs. This is so that we can verify who you are. Most commonly, we see a lot of driver's licenses, sometimes a state ID, passport, permanent resident card. These are the most common forms. There might be some other government-issued IDs that you have that we will accept, but generally it is a government-issued ID, such as a driver's license, state ID, passport, permanent resident card. We might ask for a work authorization card if you have one of those. We might ask for your Social Security card so we can verify that. Occasionally, there might be a request for a birth certificate. That is more rare, but if you've had a name change or something to that extent, we might need to see those types of documents as well. But in general, those are the forms of ID that we would like to see, and usually just one of them. Once we've received all your documents, the final step is going to be to ask permission for us to pull your credit. This is an incredibly important step. It is going to allow us to see how you've handled debt in the past. It's going to allow us to see what your credit scores are. It's going to allow us to see if you've had any late payments. Are you overextended on your credit? How much credit do you have? Are you new to the credit world? It's going to allow us to see, do you have any collections, judgments, liens, these type of things on your credit. It is the basis, one of the pillars that we use to qualify you. So we're going to use your income to qualify you. We're going to also use your credit to qualify you, what cash you have, and then eventually once you get the house, that's going to be the final piece. So in the credit report, once we pull it, we're going to take your mid score. So we pull from all 3 agencies, and we are going to take that middle score. If there are more than one borrower, then we're going to take the lowest middle score of all the borrowers on the loan. Things that we're going to look for. Do you have any late payments? This isn't necessarily going to disqualify you from a loan, but it is going to lower your credit score. And why that's important is because your credit score is tied to your rate. So maybe you have a lower credit score, which is, fine. We can still get you pre-approved, but your rate might be a little bit higher. You might have to pay some points if you want a lower rate. And so those are things that you would discuss specifically with your lender. We would talk through all the options that you have. Maybe there's something that you can do to boost your credit. So sometimes that's the case, and a lender then can do a rapid rescore. So let's say maybe you have a high balance on a credit card, and they do a simulator and find out, hey, if you just lower this score or lower this balance a bit, then your score is going to pop up by 30 points. And maybe that puts you in the next tier and allows you to qualify for a little bit better of a rate. So there are all kinds of options. But in the pre-approval process, what we're doing is we're looking to see all the debts you have, because that is going to be a key component to your debt to income ratio. This is the formula we use to see what is the max mortgage payment you can afford. Maybe you don't want to go to that max. That's perfectly all right, but this lets us know what those parameters are, and then it lets us know, based on the market today, based on rates and housing prices, this is the range that you can look for when looking for a home. So we're going to go ahead and view all that. We're going to see, have you had any recent inquiries? We might have some questions. Maybe you just applied for a new credit card. Maybe you just bought a new car. If those are some of the things that you've done, then we're going to have some explanations and just talk you through it. Did you get, okay, I see you maybe were looking for a car. Did you buy a car? I see that you applied for a credit card. Did you get the credit card? Is there anything on that credit card? And these are some of the questions that we would look through. This is going to help us determine the full financial picture and then allow us to write you a pre-approval. Congratulations, you are pre-approved. You've given us all your documents. We've looked them over. We've pulled your credit. We've run our automated underwriting systems. And now you've got that pre-approval letter. We would send it to you. We might send it to your realtor if you're already working with one. And you are now able to go out and begin to put offers on homes. In your pre-approval letter, it's going to tell you the amount of time you were pre-approved for. A lot of times that's 60, maybe 90 days that you have that letter. After that, we might have to reassess and get some new documents and make sure everything is up to date. It's going to tell you how much you're pre-approved for. It's going to tell you maybe what program you're using. Don't worry, it's not a hard fast, like this is definitely the program there for them. It may even tell you your down payment. From this point, you start to look for homes. If you find a specific home you want, then we can go ahead and write you a more specific pre-approval to that home. Maybe you're pre-approved for $400,000, but you're making an offer on a home that's only $350,000. Then we'll go ahead and write you a pre-approval for that. At this point, you are all set and ready to start searching for your home. Congratulations. Thank you for watching my video. I hope it was helpful. Go ahead and hit that like button. Go ahead and share it with some friends, and definitely subscribe to get more information on all things home finance. If you are in the states of Florida or Texas and are looking to purchase a home or looking to move to those states, go ahead and click the link below. I would love to help you further. That's all for today. I'm Madison. This is the Home Finance Minute.